Hello guys, this is Sanjay here. How are you today? Today we're gonna talk about income statement, which is the one of the model of financial modeling. So you can say that it's a start of financial modeling, right? So this is here you can say that this is an income statement for 5 years. So we have some data. So we are gonna make only the statement for 1 year. Then we look for the second and third and the fourth and up to 2070, right? So we have a data here. As you can see over here, its revenue is over 100,000, right? So you just need to put here 100,000. You just go equal sign, go to here and just enter, and you will get over there, right? And first you have to take the revenue, how much you earn actually. Then it's like a simple formula. If you wanna see your profit or the loss, so you go for the income and deduct all the expenses, right? And whatever left, that means it's your profit, right? So this is our total income, $100,000, you can say that. And we can say here is a cost of goods sold. So cost of goods sold means whatever you sell, what is the actual cost? Like if you go and buy a cycle for $100, right? But you sell it under 20, that means the cost is 100, the selling price is under 20, so 20 is a profit. Very simple math, right? So here we do the same. It's always not like the simple like $100 or $200. So I keep it very simple, like 100,000, like 60,000, 10,000, 8,000, 2,000. Like you can understand actually the processing how we do that. Then after that the figure will be different, and definitely will be different. So we go for the cost of goods sold, and you just put equal sign here, go there, just enter, and you will get your cost of goods sold here, right? So what is the formula of gross profit? Sometimes you can say it's like a 20% of the revenue, so you have to calculate 20%. I'll teach you later in the second video or the third video. But here it's very simple. Just put equal sign, go to revenue, put minus sign, go to cost of goods sold, just enter. And you can see here the revenue is 100,000 and the cost of goods sold is 60,000, and you get the gross profit 40,000, right? So normally it's a ratio. Normally it's very difficult to calculate all the cost, like a carrying cost, selling cost, and other expenses as well. So normally the company, what they do, they normally take 40% of the total revenue is the gross profit, right? So we took here like a 40%, you can see that. So it's a gross profit is 40%. So how much is the margin? Like we calculate in a percentage, right? So you just put equal, and you are calculating actually the percentage of gross profit on revenue or sale or turnover, you can say that. So just put numerator over there and divide sign, revenue done there, multiply sign, and just $100. And you can say that, oh no, so that's, you need to go there, sorry, nah, going to number 40, no, that's a problem here. So actually it's a percentage, right? So this not good, that's wrong, right? Yeah, really wrong. 40, yeah, go. Oh, it's already a percentage there, right? So if you put revenue down there, you will get it 40%, right? Because it's a percentage. If it's not a percentage, you have to multiply by 100, but it's already on the percentage data, so you don't need to actually calculate into 100. Like I can show you here. We try. So if a 40 divided by 100 into, so that's a 40, right? So that a 40, if you go to percentage, yeah, so it will calculate something else, right? So that means that's a 40%. Yeah. Okay, because I already put 100 over there, right? So if you go to percentage here, you don't need to, right, do into 100. Understand? Yeah, perfect. So now we have a gross profit, but business has a different expenses as well. So over here we called it like a direct expenses, right? The expenses directly attached to the product or the production of the product, right? Like you're working in the factory and they're making the products. The direct cost, all the direct labor, all the machinery cost, all the fixed cost, everything all get together, it makes a cost of the product, right? But when you get the finished product, you have to sell it into the market, then you will have some extra expenses like your office expenses, sales expenses, and everything you spend after the product is already finished, that is indirect expenses, right? So we know going for the indirect expenses. So that's a salary and the benefits. So you can put salary there. So this is not a salary in the factory, this is a salary of the office, right? If it's a salary of the factory, it goes in the cost of goods sold, right? Because it's the direct. So in another video, I'll tell you what we include in the cost of goods sold and how we calculate the cost of goods sold, right? So just go to equal, go to salary, just enter, right? And the another one is rent and overheads, just equal, go to rent and enter, right? Then depreciation, it's already I didn't put over there actually. So you can 1500. So we calculate depreciation like a 1500, right? And even there is a different method for calculating the depreciation. I'll make a other video with the adjustment where I'll calculate all the things: depreciation, outstanding salary, outstanding rent, prepaid rent, all the adjustment all together. I'll make a one video and you can clearly understand, but we are going for like a simple one. So I'm just giving you an idea and format of the income statement. All right, so that's the expenses. So we can do it total. So you can go, if you want to go like a sum, so write sum, right? And you have to select all those bracket and just enter. So you will get like a 19,500. If you want to calculate some in the simple form, just go there plus, go there plus, go there plus, and just enter. That's the same, right? So you can see that you can get over here. So this is your gross profit and this is your extra expenses. So you go actually the gross profit minus, this is a total, that you can like go for the total, or you can go by minus individually, minus 10,000, minus 8,000, minus 1,500, right? But I'll go for the total. So here you got 20,500. And what is the margin? That's an important thing. So I told you what is the margin. Like you go for the profit divided by income, just enter. What the hell? Go by this. What is going on? Yeah. Yep. You go to percentage and it will give you the right one, right? It's like you can say that it's like 20.5% is a margin, right? Because it's a 20 into 500. So that's a margin. No, if you have any interest, I didn't put it over there. So you can get your interest, I think 200. If you're getting any loan, then definitely you have to pay some interest there, right? So I'll go there and you just calculate. You can put here, right? Sorry, the next one. Just go about the 20. So that's a 200. And there are some other expenses you can say that you can put over here, like 1800. You can put anything, and if you have a real data, that's a wonderful. You can go by that. 1800. And the total expenses, I told you before, either you go just by plus, or you can just uh, use the sum formula, right? So this is earning before tax, right? So you already done all the expenses, and the interest and the tax is the most important expenses come later actually. So you just go by, this is your profit, right, minus that thing, and you will get here like 16,700. Still you are earning 16, but it's before tax. So it's a compulsory, you have to pay tax to the government. So we'll go by the tax now. But actually in New Zealand it's a 30% of the total income, but I put 30%, so that's why we just calculate 30%, right? So go there, 30%, right, 100. So it's 30% is 5,000 10, right? If you want to calculate here, we can calculate here as well. So it's 30% divided by 100, right? What I'm doing, 230 divided by 100. Okay, now you have to put equal. Okay, so this is your tax, right? So we have to calculate net earning. So what is your net earning? This is earning before tax minus tax. You will get over here as 11,619 altogether. So that's your profit actually. That's a profit on 100,000 revenue. So if you earn 100,000 revenue, doesn't mean it's all going in your pocket, because you have to pay for the expenses and cost of goods sold as well. So now we are going to calculate the net profit margin, right? So I told you before, let's go there and divide it by revenue. So go there. Okay, it's 0 here because it's a custom here. If you go to percentage, it will give you a percentage, right? So that's a 12% of net profit margin, right? So I hope you enjoyed this video. I'll recap a little bit. So your revenue is 100,000. Your cost of goods sold is 60,000. That the direct cost on the product. If you're doing production, that's like a production cost, you can say that. And if you are going to buy the product, is the actual cost of buying that product, like cost per unit, and then the selling per unit is a different thing, right? So the less you get the gross profit, and gross profit margin is 40%, as of 40,000 divided by 100,000 into 100, right? So that's a 40%. If you wanna make like this, that's all right. And other expenses, like you have a 40%, then another expenses like salary, rent, and depreciation. Okay, so you get 19,500 all total expenses. Then you have deduct from gross profit all these expenses, you will get these operating profit 20,500, and the margin is 20.5%, right? And we have some other expenses like interest and other could be anything. I just put it there. So you have to deduct all this. You will get 16,700 actually, and the tax is 30% on the net income. Remember, always tax is calculated on the profit, right? So you have to deduct all the expenses and way back, and when you get the actual profit, then you have to calculate the tax. So this is a tax and this is net profit, and the margin is 12%. So I hope you understand all the concepts, and definitely in the second video I'll go for some more adjustment. This is just a simple format and very simple to understand. Just uh, just deduct all the expenses, you will get your profit, right? So I hope you enjoyed this video. Thank you very much and have a good day. Thank you.